Hi, everyone. My name's Jason Krausert. Welcome to Wealth Wednesday. Let me just make sure we're all good here. Great. Okay, so thanks for coming by. Come on in. Don't be shy. Have a seat. We're going to be talking today about something that's important to a lot of people, about paying off your mortgage and how to do that as quickly as possible to save yourself as much as possible. So just before I do that, I'm just going to share this with a few other groups that I'm on. So if you can just bear with me for a moment here as I do that. Okay, hope you're having a great day in your neck of the woods. It's a beautiful day here. We've been having a great, November's been great weather. So it's always nice. So I got to admit, I'm looking forward to a white Christmas. So I won't complain about the snow, that's for sure. Okay, sorry, just one more to post really quickly, and then we'll be on our way. As I said, talking about mortgages, it's important to a lot of people. Hi, Donna. It's important to a lot of people because it is one of the, if not the biggest expense that a lot of people will have. And so it's an important one, and making a few little changes here and there, taking advantage of different opportunities that are available can save you tens of thousands of dollars over the life of your mortgage. So so that's why I wanted to talk today. So just pull up my notes. There we go. So let me just quickly give you a quick introduction. My name is Jason Krausert. I'm the founder of More Life From Your Money, and I'm a financial wellness coach and certified cash flow specialist. I've been working with close to 2,000 clients to help move them towards the peace of mind and freedom that comes from having a solid strategy for becoming debt-free and savings rich. I work a lot with clients, or my focus right now is with clients who are kind of in that 45 to 60 year range, maybe 10 or 15 years out from retirement, who are wanting to make sure they have that solid strategy for having the money that they want at retirement and being debt-free so that they can live the retirement that they want and maintain the lifestyle that they've enjoyed. So that's what I'm up to. Today's topic, again, I'm just going to review quickly 5 opportunities for paying your mortgage off faster. So as I said, buying a house is one of the biggest, if not the biggest purchase most people will have. And there are ways to shrink the amount of time that it takes to pay off your mortgage. So to literally save yourself potentially tens of thousands of dollars over the lifetime of your mortgage. So I'm just going to review some of those quickly. Just bear with me for a moment. So much of these will be available through your bank. So you can just go down to your bank and you can talk to them about any options that they have available through every bank should have different opportunities to pay your mortgage faster, to prepay faster without penalty. There are limits. They won't let you pay it off as fast as you possibly can because then there'll be penalties for, they call it prepayment. But there are limits within which you can prepay without penalties. So that's what we're talking about here today. So, and again, just talk to your bank about some of them that they have available for your mortgage. So one way, of course, is shortening the amortization period. So the amortization is the total length over which the mortgage has to be repaid. In Canada, now it's 25 years in most cases. The law changed on that, where you used to be able to go up to 30, or even before that you go up to 40 years, but they've limited it to 25 years now. So one way to pay that off faster is to shrink that amortization as much as possible while staying within your budget. So try to get a sense of what's the maximum that you can afford towards your mortgage while being able to cover all your other expenses and whatnot. And then shrink your amortization to a period that will save a lot of interest costs. Mainly, of course, your monthly payments will be higher, but in the long run, you'll save on interest. You can also, in a lot of cases, you can add a specified amount to any or all of your monthly payments on your mortgage. So what that means, I looked at RBC's site. I used to work at RBC, and they call it your double up option. So it's not literally doubling up, but I mean, what they mean is that you can add a certain amount, anywhere from $100 up to your maximum or up to your full payment, onto your mortgage payment every month if you want, or on certain months, and that can help to pay it down faster. Similarly, though with a little less flexibility, there's something where you can actually increase your minimum payment. So you can add a certain percentage up to, I think it's 10% of your monthly payment. You can add that on to increase your minimum monthly payment by 10%. And then that would be your payment throughout the year. So instead of in the double up option, I'm talking at RBC Lingo, in other banks, it'll be different. I know I think I looked at TD as well, and they have similar, or Scotia, I think it was, has similar options, just that slightly worded slightly differently. But in the double up, you can apply that extra amount to a few months throughout the year or every month. In the where you actually increase your payment, that's where you're applying that extra payment across the board every month. So that becomes your new minimum payment. There's also anniversary payments, where on the anniversary of your mortgage, you can put an extra percentage up to a maximum percentage of the original principal of the mortgage. And again, at RBC, it's 10%, and probably similar at other banks. But so that basically means that on the anniversary of your mortgage, let's say your mortgage was $250,000 originally, you can put up to $25,000 toward the principal of the mortgage on the anniversary each year. You can do that once a year on the anniversary of the mortgage. So those are a few different ways that you can that are available through the banks, different programs that different banks will have. So the last one that I want to mention quickly, is payment frequency. So we've talked about shortening the length of time it takes to pay off your mortgage. We've talked about adding a certain amount to each mortgage payment, or different payments throughout the year, or a few months throughout the year. We've talked about increasing the amount. Thanks, Brenda. We've talked about increasing the amount that you're paying on each payment throughout the year. And we've talked about an anniversary payment, putting a lump sum on each year on the anniversary of your mortgage within limits allowed by your bank. The last one I want to talk about is payment frequency. So this means, how often are you making your payments? Are you doing it monthly, bi-weekly, semi-monthly, etc.? So I've created a little graphic here. So if you can just bear with me, I'm going to hopefully share this, and hopefully you'll be able to see it. So if you can just bear with me for a minute here. Okay, so I just created a quick graphic for how to kind of summarizes how this looks. So I hope everyone can see this. So there's a website, and I'll post the link for the calculator that I used to put this together. I'll post that in the comment box below. But this is just a comparison of different payment frequencies and how quickly, or what impact that'll have on your total payments overall. Now you'll notice as we're going through this that for some of these, there's virtually no difference. So for instance, at a monthly amount, so basically we've got, this is based on a scenario at the top where it says we have a mortgage of $250,000. The amortization is 25 years. The term is 5 years. So every 5 years you need to renew and refresh the terms of the mortgage. And the interest rate is 2.99%. So that stays constant in all of these scenarios. So in a monthly payment amount, a monthly frequency where you make one payment every month, the payment on that mortgage would be $1181.83. So the total cost of the mortgage over the 25 years would be $354,550. The interest would be $104,550, and that would be paid out over 25 years. Okay, so that's kind of what we're doing. Then I looked at different options and how those different options would affect how much you actually pay over the term of the mortgage, over the life of the mortgage. So bi-weekly, that's where you make a payment every 2 weeks. So that's 26 payments a year. So in that scenario, you'd have a payment of $545 every 2 weeks. Now, if you convert that to a monthly amount, take that $545, multiply it by 26 payments, and then divide by 12, the monthly amount actually is virtually identical to when you are actually making just one payment a month. So you can see here, if you're making one payment a month, it's $1181.83. If you're paying every 2 weeks and you average that throughout the year, so to get a monthly amount, it's $1181.05. So virtually identical. Over the life of the mortgage, you save about $200, same on the interest, and you pay it out over 25 years. So there's virtually no difference on those. With the semi-monthly payment is where you make 2 payments within a calendar month. So it's 24 payments per year. Okay. So in that scenario, the term payment, or the payment every twice a month, is $590 twice a month. And then again, if you just double that, you'll get $1181. So again, it's virtually identical to the monthly or biweekly in terms of what you're actually putting towards the mortgage over 12 months. And so the cost over the life of the mortgage, the interest over the life of the mortgage, and the term doesn't change. So there's not a huge difference in any of those scenarios. The most common that I'm seeing in my practice is biweekly mortgages. Most people tend to go for that. But there's in the big picture, there's very little difference between those. Weekly, the same thing. If you do a $272 payment per week, and then if you average that over the year to create a monthly amount, it comes to basically $1180.70. So it's a little bit lower, but just by $1 or $2, so it's not that big a deal. It does reduce the cost of the mortgage over the life of the mortgage by a few $100s. And then it's still over 25 years. So there's no significant difference between those 4 options. Okay. Now, when you get where there is a significant difference is when you get into accelerated biweekly or accelerated weekly payments. So the difference here is in how the bank calculates what your payment's going to be. Okay. So I don't want to get into a lot of math and whatnot, but if you look at, for instance, the payment for an accelerated biweekly plan is $590.92 in this scenario. If you look back up at the semi-monthly amount, it's virtually the same payment. But if you go a little further down, so if you look in the monthly payment amount, if you average that payment over the year, you're paying about $100 more on an accelerated biweekly on an average each month. And what that does for you is it reduces the overall cost of your mortgage by about $13,000 over the life of your mortgage. That's pretty significant. And you pay that off in about 22 years and 4 months as opposed to 25 years. So the reason for that, obviously, is that with the semi-monthly payment, you're doing 24 payments in a year. With the accelerated biweekly payment, you're doing 26 payments. Okay, so you're adding an extra 2 payments in there. So you're basically paying an extra month, or in a sense. Yeah, that's all the math that I want to get into. Accelerated weekly, the same idea. You're paying 52 payments throughout the year at $295. The total, if you average that to get a monthly amount, it's $1280, and then you end up saving about $13,000 compared to the other methods above. So all I wanted to do in pointing that out is just point out that there is a difference in payment frequency that can accelerate how quickly you pay off the will be a little bit higher than some of the other methods, but if you can afford that higher amount, it is worth doing that so that you can save that extra money on the over the life of the mortgage. Okay, so I'm just going to come out of screen share there. Okay, so your homework for today, I guess you could say, would be to talk to your bank. Take a look at your mortgage, see what sort of payment options it indicates there. Talk to your bank, see what they say about the different options that you have available. See if it's going to be possible to either to increase your payment a little bit or take advantage of any of these other options that can help to reduce your mortgage term, or how long it's going to take to pay off the mortgage. And I would recommend that you do that, just because you never know how much you can save there. So it's a good thing to do. So let me just post that link that I mentioned earlier for that calculator in case anyone's interested and they want to play around with the numbers there. So if you can just bear with me for a second here. Oops. Okay, there we go. Okay, so that calendar is in, or that the calculator is in the in the comments box below. So it's very easy to use. Just get in there, plug in your different information, payment terms, see how that can all look, and then talk to your bank and see what they can say, or see if you can make any adjustments that can help you out. So my name is Jason Krausert. I'm here every Wednesday at 9 a.m. Mountain. Sorry, I just was going to post one more thing in the comment box. And Wealth Wednesday, it's all about providing tips and insights and hopefully some inspiration that'll move you forward in your financial journey now and moving forward into retirement. One of the things, like I said, that I do is I provide cash flow plan strategies for clients, where we look at your income, assets, liabilities, debt, all of those different financial characteristics. We look at your goals and timeframes, and then we put all that together into a cash flow plan designed to leverage and maximize the efficiency of what you already have in your finances. So if anyone wants to talk to me about that or do a free consultation, I'm going to post my email address below. So if you want to give me a call, or email me, that would be great. There we go. Just email me there anytime to set up a time to talk, and I'll be happy to set up a consultation and see if a cash flow plan is right for you. So again, I'm here every Wednesday morning at 9 a.m. Also have a Facebook group, a private group called Rock Your Retirement 101. And just feel free to go there, like the page. That's another way to get notifications of these events. And if once you're approved for the group, to join the group, just click the little notifications tab, and that tells Facebook how you want to be notified of these events and other posts that will probably go up occasionally. So I hope you all have a great week. Hope you're all looking forward to the holidays. I know I am. And like I said, if you have any questions at all, feel free to send me an email. If you want to set up a cash flow consultation, I'm more than happy to do that. It just takes about 15 to 20 minutes. And again, just send me an email or put a comment in the box below this video, and I'll get back to you as soon as I can. So have a great week, and we will talk to you all soon. And like I always say, just take the next step. You don't have to see the whole journey in order to move forward. Just take the next step, and the next steps will come clear. So have a great day. Okay, bye-bye.